Fantastic. Welcome to another episode of Coffee with Markus here on the Tradier Hub. So, in this show, we're basically having a coffee together, talking about trading, and I'm sharing with you what I'm doing here. So, this way, I hope that you find this helpful. I love trading options, and when trading options, I love to sell options. And this is where I'm trading a strategy that is called the wheel strategy. Now, over the past few episodes, we talked about the wheel strategy in more detail. We talked about what exactly is it that we are looking for when we are looking for stocks to trade the wheel on. We talked about how do we enter, how do we exit. We had a few examples, and I thought today it would be super fun to actually look at the markets live and see if we can identify a few wheel opportunities. So, with that said, let's jump on the screen and let me share my screen with you and show you the three ways how I like to look for wheel opportunities. Now, first of all, I like to use this software, which is called the PowerX Optimizer. And you'll see in a moment why that is, because the first way how I like to identify opportunities to trade is using the built-in scanners. Now, I can change the criteria for the scanners, and we did this in one of the previous videos. But now I want to spend some time and look at the markets live to see what we can identify for today. And today is November 6th. So I have a short list here of, first of all, one stock on the conservative scanner and 9 stocks on the aggressive scanner. So, first of all, what is the difference? And the difference is the risk of assignment. So, with the conservative scanner, the risk of assignment is less than with the aggressive scanner. So, as you know, the wheel strategy consists of 3 steps. First, we are selling put options and collecting premium. Second, we might or might not get assigned on the stock that we are selling put options on. And when we do, we are selling call options to collect more premium and eventually to get called away. So you kind of have to decide how aggressively do you want to get assigned. And for me, I love getting assigned because if I'm not getting assigned, I won't be able to sell any calls. And that makes me sad because this means that I'm only taking advantage of step 1 of the wheel strategy and not the other 2 steps. So therefore, I'm okay looking at the conservative as well as the aggressive scanner. And you see, again, it's 10 stocks, so it's fairly easy to go through this. And as you know, when trading the wheel strategy, we need to ask ourselves 2 important questions. And the first question is, am I okay owning the stock? And number 2, am I okay owning it at the strike price that I can sell puts on? So let's take a look at Airbnb. And in previous videos, I talked about my main criteria for actually picking a stock. And there are several criteria. The first one is I want to see that they are, let's actually put this here, that they are a profitable company. And as you can see, here's the annual statement. The green line of Airbnb, or the blue line here is the revenue, and the green is the profits. As you can see, over the past 5 years, only recently did Airbnb turn profitable. Before that, they were operating at a loss. That's not a company that I want to trade. So therefore, I'm marking it for myself here with a little no. Don't like this. Oops. Doesn't want to do it right now, but you get the idea. So let's just move on and see if we can hop to the next company. Reloading my screen really quick. And the next company here is Helen of Troy. Okay, don't even know what these guys are doing, so I can take a look at there. Provides various, let's zoom in because this is super small to read. Provides various consumer products in the United States, Canada, Operates in two segments: home and outdoor, and beauty and wellness. Okay, honestly, never heard of them, but let's actually run through our criteria and see if this is a company that we want to own. And let me just go there, zoom in a little bit more. So, first of all, we want to look at the profitability. And here we see the profitability is actually pretty good. Has been going up, going a little bit down in 2023, but super solid profits here. So I would say, yeah, I like what I see here. So in terms of profitability, which is my first criteria, this test is passed. Let me just click on auto here. Now let's take a look at the other criteria that I'm looking for. First of all, I want to see a market cap of more than $2 billion. So this is my criteria number two. Check. I want to see, does it pay a dividend? Yes. So that's criteria number three. Check. What about the P ratio? Is this a P ratio that is in line with the current P ratios in the S&P 500? And right now we're anywhere between 20 and 25. So a P ratio of 17.5 is actually lower than the average. So I like this. Any earnings coming up? Nope, they just reported earnings. So we have another 59 days. So this stock is a stock which passes my criteria that I've written down here in my trading plan when I'm talking about the stocks to trade, right? Profitable, preferably profitable quarters, but profitable years are okay. Paying a dividend, low PE ratio, market cap okay. So let's take a look now at the strike price. So the question here is, do I want to own Helen of Troy at $97? And that's where we zoom out a little bit to get some more data and get a better idea of what has been happening here with Helen of Troy. And we're looking at the last 5 years. We see that they started trading somewhere here around 140, went all the way up to around 200. During the pandemic, dropped back down to what, 110, then rallied up to around 250, have been moving lower again to 90, and right now they have been trading in a range, I want to say, between what, around 90 and 140. Let's zoom in a little bit and take a look at the range here over the past year. So this is where, if we zoom in, we see that, okay, they have found a bottom probably somewhere here around 88, 85, right? So that is probably the level. And then I want to say the range tops out here probably at around 120. And again, we always have a little bit peaks to the downside and peaks to the upside. That is okay. Just want to see where is the stock mainly trading. So right now, if we are looking at this stock and we are keeping this range in mind and looking at the options that we can trade, we see that there is one option that is available to us, which is at a 97 strike price. So that's where you have to go back and say, okay, number one, is this a company that we want to own? And I say yes. Am I okay owning it at $97? And for me, this strike price is a little bit too high, knowing that they have been trading kind of in this range between 85-ish to 120. So as you can see, 97 is in the lower third, but I like to be much closer to the bottom of the range here. So this is why I would say this is not a company that I'm looking for. So I can go through this list here, and you see here's another one that I marked as a maybe. And this is a Freeport, what is it? Freeport McMoran. Okay, so basic materials, copper mining. And again, we can look through our criteria, right? So the P ratio in line with what we see right now, the dividend yield. So they are paying a dividend, a pretty good market cap. So now we can drill a little bit deeper, look at the income statement, and we see that they are profitable out of the last 5 years. This is where it's hard to see if they were profitable, but profitable here, 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 and here. So it seems that they're doing good. So I'm okay owning FCX, Freeport Mining, in my portfolio. So let's take a look at this. And first of all, if we zoom out a little bit, we see that Freeport Mining, or FCX, let's call them FCX here. Um, let's take a look at the chart of the last 5 years. Started at around $10, moved all the way down to $5 during the pandemic, then soared up to around $45, and now has been kind of hanging out here between, I want to see, say, 32.50 and 32.50 and 45. Again, few breakouts to the upside and the downside, but I want to see where were prices mainly at. And see, right now there's a possibility to sell the 34.50 puts. So this is where I say, okay, am I comfortable owning them at 34.50? Now, of course, it would be ideal if we could get them at 32.50, but I mean, we also don't want to be too greedy. So 34.50 here is definitely close enough to the ideal strike price of 32.50 that I would like to take a look at this. So we're going to check this right now. And here's what I'm doing. I'm adding this to the calculator because I want to know, okay, what is happening here with FCX, get a little bit more data. So currently trading at 35.52. We have 4 days to expiration. So I'm getting paid for holding this or holding this option for the next 4 days. The strike price 34.50. Right now, I could get probably 16 cents, which would give me 3% annualized. And it also means that I'm getting $928 deposited in my account. Now, before I have to buy the stock and get assigned, they can drop another 3%. So this means that Freeport can either take off to the upside, can go sideways, or drop up to 3%, and I would not get assigned. So this to me looks like a really nice trade. See, based on my account size, I would trade 58 contracts, and we can actually zoom in here a little bit right now and see, okay, what is the current bid ask for the 34.50? And this is where we see currently the bid ask is 16 cents by 18 cents. So this means that it is very realistic that we can get 17 cents, right? The mid price here. And so we can actually type in the mid price of 17 cents right here. And we see this would give us a very nice annualized return on investment of 35%. And again, just shy of $1,000. So this means since we only have 4 days to expiration, but we are also counting today since right now it is in the morning of November 6th. So this means we would hold it for Monday, Tuesday, Wednesday, Thursday, Friday. So that's 5 days. So if we take the 986 divided by 5, we are arriving at the $197 per day. And so here is what would happen if we did this. So coming back onto the chart, if by Friday, so within the next 4 days, we either go up, sideways, or towards 34.50, we don't have to worry. We just keep the $986 in premium and we're good to go. However, if we drop by Friday below 34.50, we get assigned, and now I have to buy 100 shares for each option that I'm selling. So since I'm planning to sell 58, this would be 5,800 shares. So the premium I'm keeping regardless, and I would then be a proud owner of FCX shares of at 34.50. Kind of a price that I like for this particular stock because it has been trading nice and in a sideways range. So anyhow, we talked about the 3 ways to find trades. So the first way is using these scanners, and you see this is how we found our first trade here, which is FCX. Another one is where you can have a watch list. So I have a watch list, as you can see right here, where I have several companies that I like that I've traded in the past. And this changed regularly. I change them out every few weeks. but I can go through this list and see if there are stocks, and I'm fine on owning all of these stocks. But now I want to see if I do have one at a decent strike price. And earlier this morning, I was looking at IWM, and I really like IWM, the Russell index, a lot, because take a look at this chart. So this is where we have been going basically in a sideways range between 170 to 195, with spikes to the upside and some spikes to the downside. And right now, I can sell a put with a strike price of 170. So am I okay owning the Russell index at 170? Well, let's take a look at this and actually look at the calculator. And I'm going to remove a few other columns here. This way we can compare these two and see what we want to trade. First of all, I'm taking a look at the real-time quotes just to make sure. For the 170, it's trading bid ask 71 by 73, so I could probably get 72. Now, let's compare these two, right? So this were FCX, mining company. I get 17 cents. This would be $986 based on the amount of contracts that I trade. Here, I'm getting 72 cents, but I'm trading fewer contracts, so I'm getting $864. This can drop 3%, this can drop 2% before I'm getting a sign. So, I mean, just at first glance, FCX looks a little bit better. However, IWM is an index. And what do stocks indices do in the long run, right? I mean, they go up. There's a bunch of companies behind there. In fact, it's a Russell 2000 index. So there's probably 2,000 companies behind there. So that's a kind of a little bit of a safer bet that you could take here. So anyhow, I like both. And now let's actually talk about the third way. Let me see if I can zoom out a little bit of how we can find stocks. And this is where I'm looking at the heat map. You see, when I'm looking at the heat map, I see that a lot of stocks are in the green today. However, there's a few that are kind of bright red. And one of them that sticks out, while NVIDIA is up, Texas Instruments, TXN, is down 2%. So let's take a look at Texas Instruments here and see, oh, okay, that's another interesting one. So first of all, we are looking at the income statement, and the income statement super, super solid. So this passes the test. We see they're paying a nice dividend yield, low PE ratio, nice market cap. So this is definitely a company that I want to own. And the question here is, am I okay owning this at $145? And so we look back here and we see that, okay, during the pandemic, as low as $90, going up to $200. But then recently, we kind of have been trading in a range between what, 185 approximately, and I want to say 150, with again, a few breaks to the outside, upside, and the downside, and that is okay. So right now, am I comfortable owning this at 145? And I would say yes. So that's the third way how we find opportunities. And I'm adding this to the calculator to see and compare it to the other two. And again, we have FCX. So that is one where we can drop 3%, getting $986. Here we can drop with IWM 2%, getting $864. With TXN, that is the highest. I kind of like TXN. I've traded it in the past. Gives me an RI of 37. Let's actually see what we can get right now as we look at real-time quotes. Dun, 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 dun. Here we go. And we want to look at the 175. We see that it is 44 by 77. So the 75 cents is very realistic. So kind of like this. Anyhow, the important thing today is what I wanted to show you is the different ways how we can find stocks to trade. And this where, again, let me zoom out. The three ways that we have here is, first of all, we can use the built-in scanners. Secondly, we can use our own watch list. Or third, and this is how I find TXN, we can use the heat map and see what stocks are up or down today. So here on the conservative and aggressive, we found FCX. Here we found IWM. And here we actually found, which one was the last one? TXN. So super easy. And we were looking at the markets live and have identified three opportunities. And right now, the main question is which of these three stocks is the right for you? Is it door number one, FCX, door number two, IWM, door number three, TXN? That's up to you to decide which of these companies would you most likely be happy to have in your portfolio if you're getting assigned. For me, all three are super solid. I like all three of them. And I'll probably do the TXN trade just because I've traded it in the past, and I really like to make $1,000 in a week on a stock. That's not bad at all. However, there's nothing wrong. You can take all three, adjust the position size accordingly, and maybe go for $350 here, 350 here, 350 there. So you can also diversify because, as you can see, all three are diversified. Here we have semiconductors, right? TXN, technology semiconductors. Here we have an index, and here we have a mining company. So we could actually do that. All right. So that's how I find the trades. And this is what I like to do because for me, it's all about SRC profits. And what does this stand for? SRC stands for systematic. And you see, I have a system that I'm going through to find these trades. It is repeatable. As you can see, super repeatable. I can do this anytime. I mean, you can ask me in 2 hours again, or you can ask me tomorrow, or you can ask me on Thursday or on Friday, right? And I'm going through the same, and I will find stocks to trade. And the last one is consistent. And this strategy is producing super consistent returns for me. Not making any income claims, you know this. I mean, test the strategy before you commit real money to this. But that's how I actually find the best stocks to trade. So hopefully that this was helpful to you. If it is, do me a favor and leave a comment underneath the video, and make sure that you subscribe if there is a subscribe button, or come back to the Tradier Hub here. Check out all of the other great videos. And next Monday, I'll be live again at 11 o'clock Central Time or 12 o'clock Eastern Time. Both pretty much the same. And I would love for you to be here live, because then we can chat and have our coffee together. Anyhow, until then, have a great rest of your week, and I hope to see you next Monday.